Welcome back to BT. Senior business editor Mike Eppel joining us now. Happy Tuesday, Mike.
Thank you, Faiza. Good morning. How are you?
Good morning. I'm well. How are you?
Good.
Okay,
It's
Tuesday, and I know you're keeping your eye on a number of things, including home sales in the GTA.
Yep. Yeah, this is one of the big stories, I think, of 2022,
Right.
whether it's consumers or business or what have you. But the falling price for real estate, up until February, of course, everybody wanted to get into the real estate market. And then the Bank of Canada started to pull the rug out from under the dance floor, or take the punch bowl away, I suppose, with raising interest rates. The real estate prices continued I think it's now 8 months in a row that prices and sales are down on a year-over-year comparable, down 49%, the sales metric for November, according to the Toronto Regional Real Estate Board,
Wow.
to just over 4,500 transactions and 8,800 new listings, which was down 12%, and the prices down 7.2%. Again, this is on average year over year. If you go back to February, well, then the price declines are actually much more noticeable, if you will, down about 18%. So, look, this is a situation where psychology and the interest rate environment just at the start of this year was very, very different than where it is today.
Right.
Now we're basically in a stagnant market. Nobody wants to buy. Nobody wants to sell. Nobody knows how much higher interest rates are going to go up. And people who have mortgages are looking at the reset on their variable rates and what have you. And everybody's just kind of going, okay, what's next? So that's the psychological and financial effects that real estate sometimes brings. And it's going to be interesting to see if, in fact, we find a bottom. At some point, look, you're going to look at your Saturday morning real estate listings and go, oh, prices have actually come back to a more reasonable level. It's going to probably take some time for that to happen, but that is going to happen at some point. We just don't know when.
Some period of uncertainty there. While we're seeing a drop there, we're seeing an increase with Canada's consumer debt.
This is the flip side to this whole story about rising mortgage costs leading to higher mortgage debt servicing levels, and overall Canadian consumer debt loads now at $2.3 trillion. I got to read that at the bottom of the screen to just make sure I'm saying that correctly, because that's a massive number. It's up. It's not. It's we're getting up to close to records, not quite at a record, but credit card debt is on the rise. Back to pre-pandemic levels. We saw this weird lull during the worst of COVID where people weren't spending as much and they had actually more money to save, so they were paying the bills. Now we've got higher interest rates and everything's kind of topsy-turvy. Delinquency rates are on the rise, not anywhere near records or anything of that nature, but it's a metric to watch, this whole trend into 2023 about, people are having to borrow more, let's just face it, to pay the bills because of inflation. And they're taking out more credit cards too. Number of credit cards issued in the third quarter way up from a year ago.
Right. Okay. And stock markets, a bad day for that.
Yeah, look, tomorrow we're going to have the Bank of Canada raising interest rates. Next Wednesday, the U.S. Federal Reserve will be raising interest rates. And everybody kind of went yesterday, oh, wait, interest rates are going to keep going up. So markets were down. The TSX was down over 200 points. The Dow was down over 400. The NASDAQ tech stocks, they were a mess again. They have been for much of this year. Silver lining, like to leave with a silver lining, Faiza, because the price for gas here in the GTA is expected to drop to its lowest price point since January 2nd, down to just about $1.41, down 3 cents at midnight. So, we had the worry back in August about that we'd see record gas prices. Remember that?
Right.
Gas prices were supposed to spike to records. They started to climb. We're getting expensive again. But again, the market's been taken aback, I suppose, by China's economy slowing, the global economy slowing, interest rates going up. Oil prices have seen a $6 swing just in the past 24 hours.
All right. One of the biggest stories of the year, I would say. Mike Eppel, thanks so much for joining us, of course, on a Tuesday. We'll see you again tomorrow.
See you later.